Welcome back to Market Talk Monday. Today's topic might be a little boring for some, but for me, I thoroughly enjoy it. So we'll be diving into the Treasury market, the current rates, Jerome Powell's role at the Fed, and how all of this affects our real estate market. Now, first off, I want to talk about the Treasury rates, because Treasury rates, particularly the 10-year Treasury, are important benchmarks for financial markets. When these yields rise, borrowing costs across the economy increase. Now, this is significant because the Fed, under Jerome Powell, has been raising the Fed funds rate to control inflation. As of July 2025, the Fed funds rate is at 5.25% to about 5.5%. The 10-year Treasury yield is around 4 to 4.25%. 30-year fixed mortgage rates are hovering around 7 to 7.25%, with 15-year fixed rates around 6.5 to 6.75%. Adjustable rate mortgages, or ARMs, are at 6.5 to 6.75%, while HELOC rates are around 7.5 to 8%. Now, these elevated rates are the result of the Fed's continued efforts to curb inflation. Now, higher interest rates mean higher mortgage rates, which makes home buying more expensive. Now, this slows down demand in the real estate market and can cool off housing prices, especially as we move into a higher rate environment where home buyers find it tougher to afford large loans, for instance. But who is Jerome Powell? And he is the current chairman of the Federal Reserve. He's been in the spotlight due to this inflation battle that we've all come to know. He was appointed in 2018, and his role is to steer the U.S. monetary policy. Now, he controls the Fed funds rate, which affects everything from borrowing costs to inflation. So I feel like he has his finger on the pulse, and we're almost like hostages right now because he overcorrected himself after his slow start. It's time that those rates come down to help stimulate the economic growth. However, he has been facing intense pressure over the last few years. So after the inflation spike post-pandemic, Powell was initially criticized for moving too slowly, and then started in around 2022. Like I said, I think he overcorrected it and aggressively raised the rates. So this strategy, while aimed at controlling this inflation, maybe at the time that's what he was doing. Now I feel it's time to let that go a bit. But it has led to slower economic growth, and many were worried that it would have led us into a recession. Some still believe that is true. And guys, my humble opinion, I just don't believe that's where we're going. But anyway, he is feeling the heat, not just from inflation, but also from political pressure. And now some lawmakers believe his hawkish stance on inflation is too harsh for everyday Americans, especially with the rising interest rates that we've seen. Others argue that his actions could slow the economy too much, leading to a potential recession. Like I said, I just don't believe we're going there though. Now, this has led to speculation that Powell could be replaced if things continue to go south. And guys, politics aside, Trump had come out and criticized him publicly because of the rates where we're at here in the States versus the rest of the world. They are so much lower. Anyway, now while he was reappointed for a second term in 2022, any major economic downturn or prolonged inflation, which is where we're at, could lead to political pressure for a change in leadership. And honestly, guys, my humble opinion, I think he will be replaced procedurally because you can't just fire him. And I believe that the rates will be coming down. Now, how can he be replaced, or how could he be replaced? First, the president does have the power to nominate a new Fed chair, but the Senate still must confirm that choice. Now, Powell could also step down because of this backlash or the pressure voluntarily, which I don't believe he will. And then there's also impeachment, which is theoretically possible, but very unlikely unless there's some serious misconduct, and there's none of that happening. So the political landscape around Powell is key here, because if inflation persists or the economy worsens, I think it's going to be more so the inflation persisting. The pushback to replace him, right, is going to grow louder and louder, which could send shockwaves through financial markets, including real estate. But now let me ask you, right, what does this mean for real estate? Because if Powell is replaced, right, this new monetary policy shift, a new Fed chair might take a more of a dovish approach, lowering the rates to stimulate the growth, like I said earlier. I just feel like this would be the needed case for us. because of the overcorrection, being overly aggressive. I feel like if we lower the rates, it's going to put us at a place where we need it to be to begin with. Now, this would make mortgages more affordable again, potentially reigniting demand in the housing market. But lower rates could also lead to higher inflation down the road, which could hurt purchasing power, which I just don't believe will go. Like I said, I believe lowering the rates where they need to be, where they should have been to begin with, is just going to be better for us overall. Now, a transition in leadership at the Fed would likely introduce uncertainty into these financial markets. Investors may hold back on big ticket purchases, especially real estate, as they take this wait and see approach for the new monetary policy. So if we see any long-term effects, the focus will be on the new Fed's chair ability to balance that growth and inflation, right? To see where is that happy median. So if they prioritize the economic growth too much, we could see a housing bubble fueled by cheap credit, which is just not sustainable. To wrap everything up in a nice bow, the Treasury rates are high right now due to the Fed's rate hikes, which have made borrowing more expensive, especially for home buyers. It's just time that those rates come down. Now, Jerome Powell has faced significant pressure for his aggressive approach to inflation. It might have been something we needed at the time, but at this point now, I just feel like he's holding us hostage. And while he's been reappointed, right, for a second time, there's always the potential for him to be replaced at some point, either voluntarily or through political pressure. And I believe it's going to be through the latter. So any change at the top of the Fed could lead to market uncertainty. I just feel like we're just going to be coming back to a better place, but we'll see, which overall would ripple through the real estate market, influencing everything from mortgage rates to home prices. So whether Powell stays or goes, his decisions will continue to have a huge impact on real estate, and it's something we all need to keep an eye on, guys. So thanks for joining me for this Market Talk Monday episode, and you guys know what to do. Subscribe, like, share, comment, hit me up. Herm out.